Merry Christmas from the New York Stock Exchange. You're watching Financial Buzz Weekly. I'm Elena Bay, and here's a review of this week's market news. Monday was a roller coaster ride for the three benchmarks, but U.S. stocks managed to close slightly higher from a sharp sell-off last week. Trading volume was light as many investors took advantage of a holiday week, and there were no major economic reports in the U.S. for Monday. On Tuesday, the final estimate of third-quarter GDP showed the U.S. economy grew at a 2% pace during the third quarter, while personal consumption rose at a 3% pace. Existing home sales fell 10.5% to a much lower than expected rate of 4.76 million. The Dow picked up triple digits, helped by some stabilization in oil prices and recovery in hard-hit areas of the market this year. On Wednesday, stocks rallied and the Dow again posted triple-digit gains. Rising construction is bringing supply into the housing sector and helping to lift new home sales, which rose 4.3% in November to a rate of 490,000. Personal spending rose 0.3% in November, and durable goods orders were flat, both better than expected. On Thursday, jobless claims, which had edged higher over the past few weeks, are moving back down 5,000 to 267,000. Markets closed early on Thursday for Christmas Eve and will be closed on Friday for Christmas Day. Now let's take a look at some stocks. Shares of Nike hit record highs on Wednesday, a day after the company delivered earnings that topped projections. The fitness giant posted second quarter earnings of 90 cents per share. Future orders jumped 20%, excluding currency impacts, blowing past the 14.1% estimate. In a move that boosted the company earlier in December, Nike signed NBA star LeBron James to a lifetime deal. The stock has climbed about 36% so far this year. Micron Technology reported first quarter revenue, which fell 27% to $3.35 billion. As weak demand for personal computers continues to hurt the chipmaker's business. Micron stock slipped 2% in extended trading following the forecast. SunEdison plunged an incredible 31% on Tuesday. The first stage of SunEdison's collapse had to do with its acquisition binge. It acquired Vivint Solar for $2.2 billion, which got investors worried about funding. Now a hedge fund is accusing SunEdison of pressuring its yieldcos to overpay for assets. SunEdison has $11.7 billion in debt and needs billions more to fund the projects it's building over the next few years. Steelcase reported earnings on Monday, and the results were not what investors were looking for. The company's revenue slid 1.6% year over year. Steelcase is very active internationally. The company is trying to reinvent its business model and redefine the company's sales strategy in the European market. Thanks for watching Financial Buzz Weekly. I'm Elena Bay. Happy holidays, and we will see you again next week.